Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 9th of February. Starting off with the FTSE 100, which had its day in the sun on Thursday with the interest rate cut, but back down to earth at least a little bit on Friday with the market finding resistance at the top of the black rising trend channel from the end of 2023, now around 87.30. Need an end of day close above 87.30. Early this week to give us a chance of a move up to 9,000, which is the ultimate target here, perhaps as soon as the end of next month. On the downside, hoping that we won't get anything lower than the January uptrend line there, currently 85.50. Bit of bearish divergence there, but the higher high there for last week, but lower RSI, so the prospect of a potential 85.50 test cannot be ruled out yet. Moving on to the DAX, and here we had a very special setup with the bear trap island reversal near the highs. We've got the top of the channel there from October at 22,100. That's the near-term target for the end of the month while we remain above the floor of the latest gap there, 21,600. Ideally, we don't fall back below 21,300, which is the top of the old 2023 channel. The Dow is next, and I suppose this is where all the fun is, at least on a fundamental basis. You can see from the chart, though, that we've topped out at 45,000 for the third main time, and November, December, the first time, and then January, February, the second. The easy message at the moment is that we need to see an end-of-day close above 45,000 to give this market a chance of heading up to 46,700 by the end of this month. Ideally, we stay above that rising 50-day line there at 43,800 in the meantime. Draw the channel there at 42,600. That's the risk if we break that 50-day line. RSI still above neutral 50 at 54, so glass still half full, especially while we're above that 50-day line. Moving on to Bitcoin, which has been extremely volatile over the recent past, and it should have obviously basically taken out the high, but it didn't do at the end of last month. Now it seems to be finding support rather higher than it should do, which is just near the 90,000 level. That's been the main post-November support there for this market. The uptrend line there from November at 94,000, so while we're above that, looking for 108, 109 again, and even that old resistance line projection there from April last year as high as 110,000. If you're looking for a quick signal, it would be an end-of-day close, at least on the upside, an end-of-day close back above the 50-day line, 98,600. But at the moment, it looks as though we're going to roll over and head back towards the 90,000 area, especially after that RSI failure at neutral 50. Moving on to gold, which seems to be the winner at the moment. People hoarding the stuff in London and elsewhere, which is maybe quite understandable. Failed just above the 2,900 level, but we're still looking for the top of the channel there. Now heading towards $3,000 as soon as the end of this month, while we remain above recent support there around 28.30. Moving on to the stocks, and starting off with Ananda, which has been quite a success over the past year. It was up over 50% last year in 2024, and looks as though it's ready to start off 2025 in a good way as well. Obviously, it's the calls here made all the more difficult by being on the Aquis market, but so far the calls have worked. Rising 50-day moving average rebound that we had last week. Golden cross at the end of December. Initial target here 0.62, and ultimate target here maybe as soon as the end of next month, up to 0.81 pence, which would be a decent result. Not expecting anything lower now than 0.4 pence, whatever happens. On to AFC Energy, and here you can see that the market has bounced off the floor of a rising trend channel base. Rather slow here, so not in any hurry to look at the stock, but given that it's the weekend, maybe we can just tuck this under our belt and see what happens. The 50-day line looks like it's starting to rise, and above that at 9.6 pence, looking for up to 13 pence by the end of next month, although calling the end of the consolidation always going to be a bit of a difficult one in terms of time. You can see that we're not quite breaking through that September resistance line, even though we've broken above RSI 50. Cyanconnode is next, and here continues to be a bit of a mysterious situation, but 50 and 200-day lines both rising. We've already hit our first target there, 13.7 pence, and looking for the next target, which is actually as high as 20 pence. And you can see that, you can see where I've derived that from. That is a resistance line projection from early 2023. And we're looking for that at least while we're above the recent resistance area, the broken resistance area at 13 pence. Close Brothers is next, largely on the basis that it seems to be jumping very strongly indeed. We've had the gap through neckline resistance there around £2.70, sideways consolidation above old resistance, and then the push through at the end of last week. The old January peak there at £3.34 above that. Looking for the top of that rising trend channel base at £4.37 by the end of this month. So feeling or looking very perky indeed at the moment on Close Brothers. A couple of stocks where one has to say it's just a major triumph, given that both of the companies that are to follow have had massive bearish defamation going on against them. First stock winner on a technical basis is Eurasia, which broke the main resistance there around 3 pence during the week and hasn't looked back. We managed to hit our first target there, 3.325 pence. Second target within a few days at 4.5 pence, and about 4.5. Looking for up to 6.3 pence. If you're a fan of this stock and looking for the ultimate glory here, then it could be that we're actually, or one should be aiming for up to 8 pence, but maybe that would be a bit too much, and also it might give heart palpitations to all the people who've been calling it down over recent months. But let's see if Eurasia can do it. Moving on to Ferrexpo, which had a rug pull, which actually turned out to be a massive buying opportunity, really, the way things are going, or the way things have gone. We actually managed to bounce off, or had a bear trap rebound from below the September uptrend line there at 55 pence, quickly recovered the 200-day line rising at 63 pence, and I suppose the fact that that was rising was a technical buy signal. And then for the end of the week, after we had our target there at 86 pence, managed to get back in the previous range, 90 to around £1.15. So above 90 pence, looking for the shares to return to the top of the post-December range at £1.15. Punchy call, but so far it looks as though that's a bit of a cork in water rebound. The key is no end-of-day close either below 90 pence if you're fussy, or leaving it a bit of room below 86 pence. On to another stock which has been defamed to death and bounced back, which is Georgina. Beautiful rise on Friday and a solid week for the shares as well. All that's left now really is to break the 50-day line there at 7.1 pence. Above that, looking for 10 pence by the end of this month. The other point to note is that we've got the neckline resistance there around 6 pence, so above that, or ideally we stay above that, ahead of a move to 10 pence. You'll also see that we had a gap down there back in the early part of last month. And so hopefully we can fill the gap up to at least 8 pence over the near term. Stock which has not been so fraught over the near term is Griffin Mining. And here you can see beautiful rising trend channel there from the beginning of last year, gapped up through resistance. And above that old resistance of £1.75, looking for up to £2.06 by the end of this month. And you can see also just had a golden cross on Friday, and we also had an unfilled gap to the upside at the beginning of last week. So a lot of the technical ticks, box ticks in place for that. On to Gfinity, another Bulletin Board Heroes winner, and here you can see that after a bit of jiggery-pokery, bouncing off 0.08, the shares back near the highs, back near the third target there, which was 0.12, and I suppose the next thing to do is really try and work out where the shares might go after 0.12. We've got an old peak there from back in September 23, as high as 0.14, so maybe that's the level that people would look at while we're above 0.08. Really enjoyed the Fiinu situation, and here you can see that the shares have managed to rebound after a very sharp pullback from 14 pence back to 6 pence, which wasn't very nice. But we've got a rising trend channel here, and very strong candles, especially earlier in the week. In fact, Tuesday and Wednesday, very strong candles. Current view is that above the floor of the channel there, 8.25 pence, looking for 18 pence by the end of next month. I suppose their banking overdraft situation looks as though it has been settled and will be delivered. On to ImmuPharma, which got a line of resistance there from last month. That's running through Friday's peak, around 5.25 pence. Currently, resistance line there at 4.7 pence. So looking for an end-of-day close above that, combined with the RSI 50 rebound to take the shares back to the best levels of 7 pence. Best case scenarios are up to 9.5 or even 10 pence by the end of next month, while we remain above recent 3.5 pence support. Stock which I was a bit slow on, looking at largely because it has been very slow until the last few weeks, is Mineral and Financial. Here we had a golden cross to start the year, and that was around the 13 pence level. Above that, we're looking for 22 pence at the top of a rising trend channel from July 2023. This stage only back below last month's resistance, 16 pence. Delays the 22 pence scenario in coming weeks. Moving along to a pet favourite of mine at the moment, which is Orosur, largely because it's behaved itself. Two unfilled gaps to the upside back in November. The range breakout at 6 pence, testing the top of the range at 6 pence and then breaking higher. We had our target there towards 10 pence, above 10 pence, looking for 13 pence, well before the end of this month. And probably, if you're a fan of the shares, looking for greater glories, then the next level up would be 18 to 19 pence, which is an old resistance line there from 2021. But the key here is staying on the right side of 10 pence. Solid state, not a stock which many people look at, but here we got the potential of a rising trend channel base. We also got a rising 50-day line and two solid candles to end the week. Initial target here, £1.72. Best case by the end of next month, up to £2.25, while we're above the 50-day line at £1.38. Returning to the Aquis market, and one of the more exciting situations, one could say, is TAP Global, just on the basis of the boom in crypto at the moment. Rising trend channel there, which has been highlighted since November. Looks as though we've got a decent bounce of a rising 50-day line on the floor of that channel there at 2.5 pence. Apparently the company's promised a big interview coming up. Top of the channel there, heading for 5.1 pence, and we're looking for that by the end of next month, or even sooner, while we stay above 2.5 pence. Finishing off with Upland, where I suppose one is assuming that there's no smoke without fire. The smoke, in this case, has been the rebound for the shares at the end of the last week. Two very strong candles, opening at the low, closing at the high, which, as we've seen here many times in the bulletin board here, tends to be decent continuation signal. In fact, it's so exciting at the moment that I'm actually raising the potential target there up towards the 1.55 level, while we remain at least on the right side of recent resistance at 1.2 pence. Ideally, there's now no break back below the rising 50-day line at 1.1 pence after the bear trap rebound from below 1.05 pence that we've had over the past couple of weeks. That's it from me today. More updates tomorrow.